And hi guys and girls, it's the May Trading Club meeting. It's James and Lex here. We're actually recording this on the evening of the 28th of April, so we don't have the final numbers for the month yet, but this should do. We're going to talk about the month that was, the month of April, what was the interesting developments that we've seen, and then we're going to talk about the trading ideas that we've shared with you. We're gonna also focus, as we said last time, on the weekly reports that all of you are getting and how to come up with your own trading ideas based on that report. And then lots of you have been sending in questions, and we're going to be answering some of these questions individually. So let's get started with what's going on in the month of April. There might be a little bit of background noise because James and I are recording on location. So apologies about that. We're not recording this one in a soundproof studio.
City of London can be quite a busy place.
The City of London, there is an alarm going off somewhere. Probably some mayhem. But we're just going to keep going. It's the same as the markets. You know, a lot of things can happen around you, but you still need to be focused. So April, interesting. So what's going on in the dollar, James?
Yeah, so the first chart, I think one of the most important or most significant things this month was that speculators, according to CFTC positioning and CFTC report, have turned net short on the US dollar for the first time in well over a year. You can see that the only currencies that they remain short dollars and long of, or long of against the dollar, I should say, are euros and sterling. A little bit of Mexican pesos as well, but obviously not as widely traded. So this, for me, is one of the major themes of April that transpired.
Yeah. So it's like it really is. I mean, if you go back, it really is the first time in over 2 years, almost 3 years, that people are going negative on the dollar. So interesting development.
So if we move on to another slide which has come up, I remember at the turn of the year, so many people were calling for being long cash, and specifically in dollars as a reserve currency, I suppose it's safe haven. You can actually see that cash and specifically dollars have transpired to be the worst performing asset class, if you consider cash an asset as we do, in 2016 year to date. On the right hand side, you've also got the performance in 2015. I believe that was the best performing asset delivered the lowest return for, was it 60 or 70 years or something like that since the depression. So clearly the majority of returns were negative in 2015. However, year to date, as you can see, commodities have been the top performers. Again, nobody would have expected that coming into the year, or nobody was calling for that at least. Very few people were that I listened to. But that's an effect of a weaker dollar, to a large extent, reflation trade. Everybody came in very bearish on the economy and the outlook for inflation, looking to deflation at the beginning. And you can see that bonds have performed pretty well, as also 6.4% year to date, and equities are up at the least 3.3% of all the major asset classes.
And this is equities in US dollars, as you can see at the bottom. So if you're a foreign investor, you would still be down a little bit anyway. But you can see here for sure that commodities finally making a comeback. Equities, after not a great year, start of the year, are doing okay. So that's there's a lot of black positive numbers on the screen.
And actually, crude oil has now overtaken gold as the best performing single asset year to date. So for a few months, we were talking about gold being the best performer. Crude has now overtaken that.
And we're going to be looking a lot at discussing crude a lot later in the session.
Spooky timing.
And actually, I said later in the session. We're actually going to talk about it now. And you can see here that it, at the low, we were talking about, is it going to go lower? And there was, if you looked at January and February, it was making a new low, but the RSI was actually not making a new low. So we talk about is this positive divergence, and it was like an amazing time to buy it. And if you look at crude from 26 to 45, so it's up $19, almost $20. So that's
72%.
Yeah, so that's over 70%. So that's pretty amazing. If you have bought some of the stocks that we discussed that are exposed to crude oil price, some of the leveraged plays obviously did a lot better than that. But if you look here on the chart, I mean, how do you read this chart, James?
In the past month, it's come a long way. It's rebounded a long way off the lows. Naturally, in February, I believe it's the 11th that you mentioned. But in the last month, to summarise what's happened in April, up pretty much 20%, has had big benefits for the credit market, and in turn, the performance of some of the banks, which we'll look at as one of our ideas a little bit later.
Yeah.
So yeah, it changes everything. Thinking dollars, thinking crude. These have been the main drivers of the macro environment for a long time.
I agree. And crude sometimes is not a normally it's not such a big driver, but more recently, as it has been, as James was saying, as it has been under pressure and almost threatened the U.S. banking system and the economy. Crude going back up gives people a lot of confidence that maybe the economy is okay and maybe not something really weird is going on. And with crude above the 200-day moving average, that you can see it's been below over the last year. It's finally broken above it. It's a pretty positive sign. However, it's not positive for everybody. Some people have actually not made it through the month of April, and I don't think we have a chart here of Peabody, but if you look at it, you can see it's been in pretty much terminal decline. And what I would say is that it seems easy to buy some of these stocks that go down a lot, and in some of these oil stocks you would have made a lot of money on the bounce. But you know what? There's also lots of stocks that go down a lot, and then you end up not owning nothing of the company anymore. Goes into receivership. Someone else will get the assets, but people who own the equity get totally wiped out. So that's what happened to Peabody shareholders.
Yeah, and conversely, the kind of lucky ones would have been in oil would have been Chesapeake shareholders who bought the stocks. I think that was trading just over $7 when I checked yesterday. That was down. I think the low $1.68. $1.68.
So it's gone from $1.68 to $7.
But again, crude's gone 70%. So even with like double, triple leverage, it's effectively just the same thing as trading the highly speculative call option that is a stock.
We just said it was the like we said in the meetings before. It's just trading options, and they obviously can multiply your money. I mean, in general, we wouldn't recommend that because it's just very speculative. But it's maybe worth a punt at times. So here talk about maybe a bit of a larger stock than Peabody, stock that's probably never going to go bankrupt. Definitely not in the coming 50 years.
I get very nervous when I hear those words. Even with
it's not going to happen in my lifetime. I'm being told that the new iPhones are actually the best in the market. And that as we go through an upgrade cycle in Apple phones, that a lot of customers will be returning. However, they had a profit warning yesterday, and the stock was down 6-7%, and it's not looking too good on the charts. However, the stock is now trading on if you take out the cash, it's trading on a single-digit price earnings basis. So to me, the stock seems reasonably cheap. But you know what? It's a cheap stock. It's very popular, and if it doesn't make the earnings as was expected, then there's a lot of sellers around, and that's what's been happening. It's the worst performer of the Dow year to date.
And we did a poll just on Twitter after the January earnings, and we asked what the expectations were over the coming year. I think it was 6 months to 1 year, whether Apple is likely to outperform the market or not. The majority of people surveyed said no, it was likely to underperform. And you know what? If we're looking at Apple back to pretty much 95, where it was roughly in January, with the equity markets back towards the highs, it was absolutely the right call. Speaking of which, we did another survey this month. Just following a very interesting presentation that I was at towards the beginning of the month. with an institutional research provider, and they were talking about the potential outperformance of Europe and the rest of the world catching up with the US if this so-called bull market, it is a bull market, is to be sustained in equities globally around the world. We've of course seen quite a rally in the last month in Europe, but they were making the case for the rest of the world to outperform the US. That's still their view over at least the next couple of years. However, this isn't in agreement with the majority of people's views who were polled here, who still expect the US to perform better. So that's just an indication of sentiment. I think people are still very much focused on the US leading the world. I, for one, it's only my personal opinion. I don't have a position on this. Think that these other equity markets around the world have simply got to catch up if this rally is to be sustained.
I mean, if you look at it from a different perspective, it's obviously earnings season at the moment, and in the US, 80% of the companies have beaten their earnings estimates by about 3%. In Europe, only 57% of companies have beaten EPS estimates, but just a little bit more, by 4%. And in Japan, only 40% of the companies have beaten earnings estimates. So that makes kind of sense on that basis. However, the actual earnings, so these 80% in the US have beaten earnings. However, the actual earnings are down 8% year over year. And in Europe, they're down 18% year over year. And in Japan, they're down 11%. So everywhere it's harder and harder for companies to make money. However, this number is a little bit misleading because it includes energy stocks. And these energy stocks have obviously had a terrible time with the oil price collapsing. However, in the US, actual earnings estimates or actual earnings are sort of 8% down ex energy. So for the overall market, but if you take out energy, it's down 7%. So that actually is quite close. However, in Europe, it's coming, like we said, the earnings are down 80%. But if you forget about energy, then they are actually flat. So maybe, overall the picture in Europe. So you see all these headlines coming through, and then you know what? Actually, the number in Europe is maybe okay. So in that sense, you've sort of back to James saying actually
some really interesting stuff in there. I think it's cyclical, and I just think that still the rest of the world cyclically is lagging where the US is. The US is just ahead in the cycle, and that's why towards the peak, you're going to see earnings begin to recede.
Yeah. Okay. Let's get on with it.
Yeah.
So we're going to talk about this month, and as usual, most of the work is done by James, and then I'm the one who takes most of the credit. So that I think is the way I like it to be. So we're going to talk about the current trading ideas that we've explained and built up over the last sessions. Like I said before, we're going to look at the how you can come up with your own ideas using the research that we provide you. And then there's been quite a few trading questions. Some of them have just been answered directly. I want to talk about a few here in the in this trading club meeting.
Yeah, and thank you for sending them all in. By the way, I know I got opportunity as well as Les did to speak with many of you directly. It's always good to get your ideas, and there are some featured later on alongside the questions that you had. So do keep those coming. You can just email us at info@lexvandam.com, the main mailbox, and we welcome more questions there, whether it's new members or current members. It's all good.
Okay.
So thank you again this month.
These are the ideas from last month. Maybe you want to go
we'll rattle through these fairly quickly. The themes we were looking at last month